Don't talk to me about that non-PG nonsense. I don't want to hear it. I don't want to hear it. There's only about 3 ways you could get credit or get approved for credit. That's through credit, your actual credit score, your credit profile. That's through revenue-based lending because your actual business is making money. So they're basing it off the revenue. They don't really need to see your credit. Or you got some kind of cash flow. All right. Where's the collateral? What's really going on? What's your assets? All right. All right. Let's talk about that structure a little bit more. All the credit cards that you get should be reporting to all 3 credit bureaus. Okay, some of y'all got credit cards that's only reporting to 2 credit bureaus, maybe 1 credit bureau. You're doing yourself a disservice because it's not reporting across the board, building synchronized credit.
Yep.
Okay. Let's get active. Yeah.
We're here at the Credit Summit.
Yeah.
People are talking credit restoration. People are talking funding.
Yeah.
I'd be remiss
if
I had a business funding expert next to me.
Yeah.
And I asked a business funding question. There's somebody watching this.
Talk to me,
They
man.
don't understand that the difference between them getting 10,000 and 50,000, them getting access to 50,000 versus 100,000 is having access to the right information. Right?
That's a fact,
if somebody's watching this, they got a business. They're e-com. They're in trucking. They're trying to start a restaurant, a beauty bar, whatever it is that they're trying to do. They need the capital to do it. Give them a step-by-step blueprint of what that looks like so they can go out there and get that bag for their business.
Listen, I break everything in life down to the 3S process: structure, sequence, and strategy.
Break it down.
All right, so if you're a business owner, you already looking at the strategy. You already know I'm doing e-com, I want to do a restaurant, I want to do everything else. But you don't have structure, nor do you have the sequence. Okay, the structure is when you fix the credit, you build the credit properly, and then you look into the sequence, which is the funding. That's the funding, where you're gonna go, how much you really need to access in order to take care of your strategy. The 3S process: structure, sequence, strategy. So let's talk about structure a minute. Okay, when we fix our credit, I don't care if you do it yourself. I don't care if you do Metro 2. I don't care if you do consumer law, whatever the case, all right? I don't care what it is. You have to do it.
Yep.
It's a necessity for business funding. All right, you fix that credit. But we also know that the credit score doesn't matter.
Fact.
We have to actually have the right trade lines on our credit report.
Fact.
Okay, what's a trade line? Probably been using these big words now. We don't know what a trade line is. A trade line is anything that credit report is reporting, that credit bureau is reporting on your credit. Okay, that's your authorized user trade lines or your primary trade lines.
Right.
Okay, the authorized user trade line, that's when you go piggyback on someone else's good habits or bad habits, right? And you say, hey, put me on your credit card so my credit score could boost up. We don't want to do that. We don't want to do that. We want to actually do primaries. Get our primaries, okay? This is when you actually go to that auto loan or you go get that credit card under your name. You're not piggybacking off of anyone. All right, so those are trade lines. And what do we need to have on our credit report to really look good? Listen, nobody's talking like this. I'm gonna keep it real with y'all. Nobody's talking about this kind of breakdown.
Let's do it. Let's go.
Because all the gurus online, they talk about go get all this credit cards, get 200,000, 250,000 in your personal credit. All that's cool. But I study FICO. I study the FICO algorithm. I study the FICO metrics. I study the FICO scoring system. Okay, so all that personal credit that you're getting is stopping you from getting more business funding. That's how I'm gonna start there. You only need 3 to 5 personal credit cards. Leave it right there. 3 to 5 personal credit cards, family. Okay? And we want to build those limits to $10,000 or more per credit card. Okay? Each of those credit cards should be either tier 1 to tier 3 credit cards. No tier 4s. What's a tier 4, Prada? Shit, what are the tiers, period? Let's talk about it. Tier 1s, Citibank, Bank of America, Wells Fargo, Chase. Okay, those are our tier 1s. Our tier 2s are going to be our regional banks. Key Bank, TD Bank, Amex, Discover, okay, Cap One, all right, anything regional, Truist Bank, the list goes on. That's just about every other bank. Okay, then our tier 3s are going to be our community banks and our credit unions, family, your Navy Federals, your Penn Feds, okay? Those are tier 3s, and you're allowed to do anything between tier 1 and tier 3. What's a tier 4, and why should we stay away from them? Tier 4, that's your Macy's cards, that's your store cards, your merchant cards, that's that Credit One credit card, all right? That First Premier credit card, that Merrick Bank, that Open Sky, those are trash credit cards, family. Stay away from those because that's stopping you from actually getting more funding because you look like a consumer. Those are consumer credit cards. You're not building credit. You're not building real relationships with banks when you have those credit cards. Stay away from them. All right, let's talk about that structure a little bit more. All the credit cards that you get should be reporting to all 3 credit bureaus. Okay, some of y'all got credit cards that's only reporting to 2 credit bureaus, maybe 1 credit bureau. You're doing yourself a disservice because it's not reporting across the board, building synchronized credit.
Yep.
Okay, so that's how we're gonna do that structure. Structure needs to look like that. All right, and if we talk about installment loans, we need to get a few. If you're in the market for a mortgage, get a mortgage. All right, that's out of your budget, I understand. Now, right now, you're in the market for auto loan, get an auto loan. Oh, that's too much too? Well, get a personal loan. All right, because at this point, we're building credit. We're being intentional. And in order to build intentional credit, you have to have installment loans, family. Okay, so go get that personal loan. Why would I get a personal loan? Well, you're gonna build the credit. You're gonna beef up your credit profile. Okay, and what you're gonna do with that personal loan is pay your regular bills. And when you make your 9-to-5 income or your side hustle money, you're gonna pay off the loan, okay? You might charge a little 2% on there, 3% on there, doesn't matter. It's a bigger picture. Why are we doing this, family? To get business funding. All right, so when you understand that structure, you're not chasing personal credit cards no more. Now you're ready to go build business credit and business profile, all right? Don't talk to me about that non-PG nonsense. I don't wanna hear it. I don't want to hear it. There's only about 3 ways you could get credit or get approved for credit. That's through credit, your actual credit score, your credit profile. That's through revenue-based lending because your actual business is making money, so they're basing it off the revenue. They don't really need to see your credit. Or you got some kind of cash flow, all right? What's the collateral? What's really going on? What's your assets, all right? So now we talk about business structure, okay, because it got to be aligned with that personal profile that we just built up. We just built that up. So it got to be aligned with the business profile. Business profile, we talk about that all day. But at least stay out of the high-risk industries. Stay away from the high-risk industries, okay? That's number 1. That's before we start. A lot of y'all don't even have businesses talking about I want business funding. You got to get an LLC or INC, family back. There's 3 ways to really go into getting your LLC together. 1, you start a business, LLC or INC. Here's the caveat of starting the LLC or INC. You only are eligible for credit cards when you start a brand new business, okay? Only credit cards. Can't get a business loan, can't get a business line of credit. That's why when you start your new business and you need that loan, you go to the bank, they deny you automatically, even if you have good credit, because you can only get credit cards with a new business, all right? That's how it starts. So what's the next strategy? You can modify a current business that you may have already had, right? Some of us, we started businesses before. We're like, all right, I want to use this business for funding. It's still got to be structured right, all right? And then the third way is to buy a shelf company. You buy a shelf company that's already been existing because the banks want to see experience. They associate experience with age. And we only need about 2 years to qualify for those loans and lines of credit. Now you get all of the funding, credit cards, loans, and lines of credit. All right, this is how we get active. All right, so we start with our personal credit, we structure it right, then we get our business together. All right, so now when you find out what kind of business you want to start a new one, you want to modify a current one, or you want to buy a shelf company and modify it, we're going to bust that down and now get the right address, right phone number, right email. This is where the credentials start coming into. Right? These are the business ingredients. These are the key factors that get you denied on the business side because you're not looking like a true business. Personal credit structured, business credit structured, business profile structured. Great. Now let's go get some funding. You're ready now.
Let's go.
You made it to the big leagues.
Let's go.
You in e-com, get what you need. Don't get too much because I got a student that just did 7 figures in funding. All right? He didn't need that, but we made it work. But he did it. And it's possible to do, okay? 90% of that was no docs. That's what everybody like, right? No doc, I need no doc. Where did no doc banks? All right? What we'll do is we'll find out how much money you need and we'll reverse engineer the process. Marv told me he need 100,000 to take his YouTube to the next level. I'm like, let's go get it then. All right? So I know the banks that's gonna give you high limit credit cards and we probably could do a round of funding for about 4 banks that hit 100,000. Okay, so you need to know what banks that is. If you in a tri-state, you up there with me, and you actually could get loans and lines of credit. We'll just go to M&T Bank. All right, we'll get 90K over there on a loan or a line of credit. All right, then this one that nobody's running to, and I shouldn't even be telling y'all, but Marv, my brother,
Give it away. Give it away.
First Bank just gave one of my students 90K on the line of credit, business line of credit.
That's it.
First Bank.
That's it.
Nobody said this one yet. All right, and don't go running over there talking about Prada sent y'all. All right, listen, keep it low. I know this on the internet, but keep it low. First Bank is giving out that bag, man.
There you go.
All right, so now you just understand the sequence is easy. You figure out what you need and you figure out where to go and get it. Vet the banks before you apply. They need you more than you need them. They're in the business of lending, okay? So when you vet in the banks, you figure out how much you need, where you're gonna go and get it from. You find out, okay, this bank is doing this, PNC is giving out this, Truist is giving out that. This is how you get super active, fam. And now, don't matter what strategy you're in, no matter if it's e-com, no matter if it's real estate, you're using the money from the banks to infuse in your business and take it to the next level. This is how you get active in business funding.